Hi there, dividend growth stock investors and ETF enthusiasts out there. Colby, the DGI Crab, coming at you with episode 12 of the Great ETF Race, where I take 8 of the most popular dividend focused ETFs out there on the market, and I am investing $5 every single week into each of those 8 ETFs to see how they compete against each other and more importantly, show that anyone can invest, even if you don't have a whole lot of extra money or the desire to research a bunch of individual stocks. You can just pick one or two, or maybe even 8 ETFs and just consistently throw a few bucks in there, here and there, as you can, and you will eventually start to see a nice steady stream of ever growing passive income coming into those accounts. I'm not a professional financial advisor, so please don't take this as advice. Do your own due diligence before investing in anything, not just because I told you to or not to. But the 8 ETFs, of course, are VBRO, the Vanguard Small Cap Value ETF, DHS, the Wisdom Tree High Dividend ETF, the only one that pays monthly out of these 8. VYM, Vanguard's High Dividend Yield ETF, SPYD, the State Street S&P 500 High Dividend Pair ETF, VIG, the Vanguard Dividend Appreciation Fund, DGRO, the BlackRock Dividend Growth ETF, SCHD, or as I call it, the internet's favorite dividend ETF, the Schwab High Dividend Yield ETF, and then finally VYMI, the Vanguard High Dividend Yield International ETF, which if you've been around, hanging around this channel for long enough, you know this is the only non-US stock investment that I make. So, where do we stand here after 12 episodes, which also means 24 weeks of investing $5 a week into each of the 8 ETFs? Well, got the same 2 as we did 2 weeks ago in episode 11, still sitting here up top. The Vanguard Small Cap Value ETF, VBR, is still running out in front. And this really occurred after the presidential election back in November. It really seemed to spur along the small cap market just entirely. DHS has been in either second or third place, it seems, just about this entire time. It's been a very steady performer. Now, DHS, since episode 11 and now, did pay out its November dividend. I got 41 cents in November for my DHS holdings. DHS has a slight edge over the other 7 in terms of the dividends it's paid out, because all of the other 7 pay their dividends on the 3rd month of every quarter. And as I said, DHS pays monthly. So since September, when I got a payment from all of them, DHS has given me an October and a November payment. But that being said, we're talking about 41 cents in November and 20 cents in October, so just 61 cents. So while DHS does have the highest amount of money paid out to me in dividends thus far since starting the race with $1.07, that 61 cents that it has paid out, let's just say that wasn't there. We'd have an overall value here of $126.50, which would still have it still pretty comfortably in second place anyway. So while it has gotten a bit of an extra boost because of those extra 2 payments it's thrown out, they are smaller payments because it's monthly. So they've spread those out over 12 months instead of 4 payments a year like the other ones. VYM, sitting here in 3rd place, has really performed nicely for the last several years in terms of share price value, and the dividend yield is very steadily moving up year over year in the high single digits. VYM, I'm very curious to see what they pull off in December, but it's looking like VYM, again, we'll have to wait and see, but VYM might even have a shot at a 10% increase this year from last year in the dividend, which would be just great because Typically, it yields in the very high twos or low threes. Right now, it's really been doing well in terms of share price, currently yielding just 2.77%. It's usually more in the 3% range, but that's just what happens when the share price is way up and it's performing really nicely. SPYD had for quite a while been the front runner, and it hasn't gone down particularly in share price. It's just VBR and DHS in particular have done really well over the last 30 days and have just surpassed it in share price growth. VIG and DGRO very, very close together here, just 18 cents apart in overall value. And actually, as you can see here, VIG and SPYD are exactly even in the race. DGRO just slightly behind VIG. I'm surprised to see SCHD so far down here, but the longer we go with SCHD, it's gonna churn out some pretty nice dividend payments. Absolutely. It is one of the higher yielding ones here, currently sitting on a 3.42% yield. Its yield has gone way up this year. And I would say of these 8, I'm probably the most excited or at least intrigued to see what VYM and SCHD do. Finally, VYMI, it was actually a little bit in the negative in episode 11. Apparently, the presidential election was not something that was great for the non-US stocks the way that it was for the small cap ones. But I'm not totally surprised by that anyway. Nothing against my non-US friends out there. But the international markets for quite some time now have just not kept pace with the US markets. So I wasn't expecting this one to be a massive share price grower. However, it is most likely going to be consistently the highest yielding of all 8 of these, even over SPYD. You can see here it's currently yielding 4.5%, so certainly nothing to sneeze at from a starting yield perspective. So in December, if VYMI pumps out a very large dividend payment, which it kind of historically has churned out a pretty large payment in December, and then it follows that up with a kind of a smaller payment at the end of the first quarter in March, then VYMI could end up gaining some ground here, but it's pretty far back from the rest. Every other ETF is up at least $4.26, and VYMI just sitting here at 22 cents up. 60 of those cents came from the dividend payment that I got out of it back in September. So VYMI dragging just a little bit here. And I always like to remind you in these, you guys, it's very good to pay close attention to just small milestones when you're investing, whether it's big amounts or small amounts, either way, but certainly with smaller amounts of money like this, it's good to keep yourself motivated by just celebrating and acknowledging small victories, small milestones. So here we can see the value, the overall value of this is right at $1,000. Invested 960, but because the share price value is up, we've almost gotten the value of this up over 1,000. And if we take a look here at the annual forward dividend income, we're just shy of $30 a year. And I'm certainly not going to complain about that at all, because eventually we're going to get this a lot higher, especially when we start seeing some larger dividends get reinvested back into this. And our yield on cost staying steadily above 3%. And the longer I go with this, regardless of what the share price does, and we're assuming on all of these the share price over the long haul is going to continue to go up, but the yield on cost will certainly continue to go up as more dividends get paid out and get reinvested back into the underlying fund that paid them out. By the time this is 3-4 years old, the yield on cost here could very well be up above 6%. And that is something that's very nice to see. And that just comes from reinvesting the dividends and having the actual dividends themselves consistently go up each and every year from those ETFs, which is the point of dividend growth investing. Because eventually, we're all going to hit the point of retirement, and we're probably not going to be reinvesting our dividends very often, if at all. We're going to be using those to live off of. So when you're not reinvesting your dividends anymore, you want to still get raises. You don't want that income to stay flat or even go down slightly, because inflation may eventually catch up to you depending on how much you've got put away. So I want to keep getting raises to my passive income, even when I'm at the point where I'm not adding new capital of my own and I'm not reinvesting those dividends. And with these funds here, I think most of the time you're going to see that. That's exactly what VIG, DGRO, and maybe to a lesser extent SCHD, DHS, and VYM are designed to do. Sometimes it might be a little hit or miss with, small cap markets or international markets. But truth be told, I think the quality of all of these funds is such that in most years they're going to do just fine. So that's another episode of the Great ETF Race. Episode 13 will be the last episode for 2024. Leave me a comment down below. Let me know if you think VBR is going to be the one that holds the #1 position at the end of the year. And send me any questions you may have to dgicrab@yahoo.com. I'm always happy to respond with an email. And if you have something that requires a bit more of a discussion, with your permission, of course, I'll do a video response. And we can all become, hopefully, better dividend growth investors together as a community, which is one of the goals I have for this channel. And I appreciate all of you for continuing with your support, leaving productive comments down there. Absolutely love to see that. Maybe that'll change as the channel continues to grow, but even though I don't get hundreds of comments on here just yet, I find that 99.9% of them have been excellent, very positive, and super constructive, and I've learned a lot from you guys. So keep it up. Appreciate you all very much. And until next time, you guys, you keep on investing all the way through to the end of the year, and I'll catch you on the next one.